For one, CPI data did not put a bale shit on the market. However, we're not quite sure that we're ready to say that we're back into a bull yet. On today's show, Kevin and I are going to jump into the CPI data, how that's going to impact the macro, how that's going to impact the stock market. A lot of impact happening today. Before we get going, please like today's stream, subscribe to our channel. Nothing we say on this show is financial advice. We're just two guys who like to talk about the markets. Sometimes we get it right, sometimes we don't. So do your own research before you make any sort of buying and selling decisions. We had an interesting morning, Kev. CPI data came in at expectation, but I was diving into it a little bit, and I don't think the headline numbers paint the picture that, is the actual legit data once you dive into it more.
Yeah, I mean, you can bring that up. I learned from you. I was just looking, I guess, at the headlines. Maybe that's what everyone's doing right now, like you were saying. But yeah, it's pretty interesting when you go into the summary of it. But I think a lot of what we're seeing right now is headline news, like you said. That what was it? The gas went, or oil went down, and that could obviously spike up at any point. But CPI data coming in as expectations, I don't know. I don't think that's good or bad. I think the market priced in, a good number, or at least even to what we got beforehand. And right now we're just seeing massive liquidation. So if you want to dive into some of the more of the info about what was in the summary.
Yeah, we can. And I mean, it's down, is at 6.5%. It was at 7.1% in January. It has declined 0.1% in December on a seasonally adjusted basis. Now, if you look at it a little bit more, food index increased 0.3%. We had the home index rising 0.2%. The big thing that pulled it down was energy. So energy went down 4.5%. We also saw airline fares went down, but there were increases on a lot of things that people spend money on a regular basis: shelter, furnishings, motor vehicle insurance, recreation, apparel, all sorts of stuff that are more frequent purchases. The prices continue to go up. So while it's nice that overall inflation is going down, we still have price going up in a lot of other areas. And so I think if there's a month coming up where, God forbid something else happens in Ukraine or with Russia, and we have more, negative news around energy, or something happens with the Middle East, there's all sorts of things that could play out that would lead to oil going up. And that would be another spike in inflation. So I don't think we're out of the woods yet by any stretch of the imagination. People want to pretend oh, here we go. The Fed's going to go down to 25 basis points this next FOMC meeting. We're going to do a few of those, and then we're going to pause, and then we're going to pivot later this year. I still don't think that's the play that's going to happen. And if it does happen, I think it could lead to just a delayed onset of a recession. So I think that the Fed still, if we want to get this shit over with, because personally I do, I think the Fed needs to just we need to see inflation consistently go down. And, we saw the decrease in wages from last week. That's a positive sign. We saw inflation today, kind of a positive sign. And Lord knows I'm not an economist. I'm not an expert in this stuff, but that was just my interpretation of it, was that the headlines painted a rosy picture, but the actual data itself doesn't paint as good of a picture.
Yeah, and I think that's a huge part of maybe some of this FOMO that we're actually seeing in the markets too. Clearly you went in, you researched a bunch of stuff, you read pretty much all the stuff that's probably should be noted, especially since a lot of people that are going to get hurt in the market is always going to be retail. It's people who don't have enough capital to move, or they're willing to, take a bit of a hit. These are people who are like you and me, just living day to day. If they're buying a risk asset right now because of a little pump and, inflation, everything in their life is going up, from housing to, eggs. That's been the big one recently. But I mean, your lifestyle is going to change. Everything's going to get more expensive. So it'll be interesting to see if there is a sell-off because people can't keep up with the new, price of goods and services that they use on a day-to-day basis. But yeah, I'm not buying this at all. I mean, he even said that the wage earnings were coming down. In today's speech from Biden, he was saying how there's more jobs that have been created under him, and also there's been wages have gone up for everyday Americans. And just from a objective point of view, that's not good for inflation. Those are two things that you don't want to see. I'm not saying it's I don't want to see people lose their job, and I don't want to see people not be able to make money. But at the same time, if we really want this thing to get under control, those are two things that need to go. Well, wages need to go down, and unemployment needs to rise. It's just how it has to work. They need to slow the velocity of the dollar. There's just too many people spending money right now, and that's unfortunate.
For sure. And like with day-to-day expenses with food and everything, I'm a creature of habit. I buy a lot of the same things week in and week out, and I haven't really seen the prices of those things going down at all. So if anything, they continue to go up on a lot of meat, all that stuff. So don't want to bore people to death with that. Ace, just take a step or two away from the cliff. All is going to be okay. None of this stuff really makes sense at the moment, which is why I'm just kind of like over here moving into cash. If we see pumps like this, like I'm in no rush to deploy a bunch of capital back into the market.
Yeah, same here.
Okay. Let's, we talked on CPI. We don't need to beat that to death. Everyone's probably seen stuff around that. Let's look at some of the charts. So let's start with the DXY, and I'm guessing we saw a big old red candle on that earlier.
Oh, don't you know it? That was went straight down to level of support that we had marked out a few days ago, actually a week ago or so. Let me just pull this up. Yeah, DXY obviously as Bitcoin and risk assets go up, the stock market went up today. Pretty much every coin in the market went up today, including Bonk. Actually, I have no idea if Bonk went up. We'll check that later. But as you can see at the DXY, let me see if I can pull it daily. We opened here and we came down here. So we're at 102. Currently, we're at 102.219. The level of support that I marked out was this blue level right here. Let me just make this a little bit thicker so you can see it. It's at 102.038. So we broke back into this parallel channel. This is, again, I still say it's a bull flag. You're coming down, trading. You broke out of it, but then now you're back into retest it. I think you're going to find some support here. We're actually at pretty key level support. I just want to show this on the weekly. Is it the weekly or the monthly? It might be the monthly. Let me pull up the monthly real quick. So throughout the history of the United States, I guess the DXY, the US dollar, we can see that this level right here, 102, it's been retested. It comes back, bounces off it, hits off it a lot. So right here, it hit off of it. Touch here. We're currently at it, finding it at support where it's been resistance in times prior. We can see right here, wick off. So this is a pretty key level of support. And what I'm looking at on the monthly for the dollar is that we're pretty low on the stochastic RSI. So when we look at the stochastic RSI, we're down here. It's pretty oversold for the dollar. Let's go to the weekly. We're completely oversold for the dollar. And let's look at the daily. Daily is getting close to oversold. So on the higher time frames, the macro, it looks pretty good for a rebound. Obviously, I've been calling it for weeks, months. That's my bad. The charts and everything that I'm expecting for Q1 into Q2, might take a little bit longer, but the dollar itself, I think, is primed for a good macro move to the upside. I still believe that. I do not have any change in opinion or heart. We got to hold the support at this level, stay above 100, obviously, but this level is really key. We've seen it from, let's see, over the years. I didn't check the years, but
it's interesting.
16.
I saw some people. Sorry. I saw some people earlier today calling for 2% moves in the market based on where inflation came in, and even with a headline number, quote, good reading that people were happy about, we still only saw the legacy markets move between 0.34 and 0.64% up. If you look at the Dow, NASDAQ, and S&P. So I think that there's still a lot of people, a lot of the big money that moves markets wants to be bearish right now. I think that market moving kind of money is not ready to go into a bull market, and they showed it by not really putting a whole lot of volume into the market today, even on what people thought would be a good day.
Yeah, I agree. Those gains seem like, I think the gains were a little bit higher at some point, but it looks like they sold off a little bit. And it was a little bit redder earlier in the day. So kind of like an average day, you know what I mean? Not much really changed.
Yeah. It was a very sideways day overall. We saw, some of the bigger stocks. I'm a big Nvidia guy, that went up nicely, but a lot of stuff, Apple, Amazon, Tesla, Google, a lot of these things just traded sideways, or some of them were even down a little bit. So I still think that the people who move these markets are going to move them to the downside and are waiting for the opportunity to cause max pain and then buy people's stocks or tokens for them at the cheapest price possible.
That's my theory. That's 100% what I expect to happen. And again, maybe we see the legacy markets move a little bit more closer to March, just because that would be the end of Q1 and we get earnings and stuff like that. See how the first quarter of the year went. But I still anticipate, March being terrible. I think people might react a little bit more harshly around that time, February into March. But as of right now, I think the market's pretty euphoric for what we got. And the dollar, it did go down, but at the same time, I think it looks prime for some move to the upside over the next few months. So we'll have to keep an eye on that and see how risk assets, react over the next few weeks. But let's move into Bitcoin. I think that's the important one to look at today. So we're on the weekly here for Bitcoin, and this falling wedge, this blue line right here, these two blue lines that form this wedge. I've been talking about this for a while. This is usually a bullish breakout pattern, right? We've tested it here. We came down. It's a pretty big candle when we come down to. Let me see if I can open this a little bit more. We tested here at the upper trend line, came down. That's where we found that monthly support at 19.6. Traded sideways a little bit. Then we tested the trend line again, and that was FTX all the way down to test the bottom part of it. And then we've been trading sideways right here over the past few weeks. And then today, obviously, we broke out, and we're testing. We broke out of the top of the trend line. We hit the 20-day moving average on the weekly. But there's some stuff around here that's kind of important to note. Let's look at the weekly stochastic RSI. This thing moved up pretty significantly. And I think on Sunday's close, we're going to see this thing pretty much in the overbought territory. And for being overbought in this area, it's probably going to break back down into this falling wedge, which means there's still a lot more to go down. I think this might be a fake out for a lot of longs. It also could be just, we're going to test this monthly support, see if we get close to that 19.6. I don't think we're going to close above it. I think maybe we wick above it, we wick to it, but I still think that with the weekly being nearly overbought, it's going to be overbought in the next close. The daily severely overbought. Look at this. We haven't seen a red day since Saturday, and it's just been nonstop. Let me see what percentage that is. It's about a 13% pump over the past few days. So that's something that, it can't go up forever, even though people like to say up only. Let's see. The weekly is the one there's a lot of things that I've been watching for. Obviously, we're looking at this death cross up here, the 20 and the 50 and the 200 EMA. This might change a little bit based on the weekly close for this week, because it looks like we're going to be green this week. Everyone just wants to keep buying into the pump. But I think that we're seeing volume decrease right here. We're seeing volume decrease, which is a bearish divergence for me. We're seeing the stochastic RSI get pretty overbought fairly fast. And let me see if I can pull up a parallel channel. Just want to go from here to here to here. And on the weekly, we are actually in what is a bear flag. And it kind of marries up really well. It was kind of hard to see without this pump that happened here, but we're doing no different what we did here and what we did here. So that doesn't give me a ton of confidence. I think that a lot of people are getting trapped here. A lot of late longs, just like people who are shorting at 16.8, 16.9. I think that there's going to be some max pain, like you said. Maybe, whales have been pumping this and selling to retail, and they know that over the next few months, the rate hikes are finally going to hit retail. There's going to be, massive layoffs, unemployment's going to rise, and the goods are continue to rise. Anything could cause a massive sell-off where they just end up buying back the Bitcoin that they're getting rid of right now at a way cheaper discount. So that's something to keep an eye on. The macro for me has not changed at all. It's just, the shorter time frame is just noise. I should have seen that we're going to probably retest some of these higher levels, but at the end of the day, we just saw massive liquidations across the board. So I'm not surprised by what's happened.
Yeah, and Bitcoin has been getting rejected off of that 19K number, I think 3 times today. Like in just the last, I mean, since the market's open this morning, like there's been that consistent rejection off of that number. And Lord knows I am no technical analysis guy, but with what is supposed to be bullish news, to see that happen 3 times in the span of a few hours doesn't seem ideal to me.
I'm just going to pull up the CoinGlass liquidations. See if we can pull it up there. There we go. Or this is the funding rate. Yeah, obviously Bitcoin is fairly neutral, positive. So that, I think a lot of people won't be opening up shorts there. Going long from here, that's pretty not a great sign. But let's look at liquidations real quick. So in the past 24 hours, we've seen nearly 400 million in liquidations. And past 12 hours, 182, Blink 182 million liquidations. And I mean, that's a lot of money. I mean, this is getting close to the FTX. Obviously, it's nowhere near the FTX liquidations, but there was a short squeeze and they hurt a lot of people who were going short too early. So we see a lot of price being pushed around. Bitcoin, let's see, in the 4 hours, it's been 48 million out of Bitcoin. Past 24 hours, Ethereum's leading the pack with 170 million, with Bitcoin 144 million. And it's kind of even funny because there was I think I saw Bitcoin Cash had like a decent amount of liquidations earlier too. Ethereum Classic, there was like a Bitcoin Cash I saw somewhere where it was like a couple billion. Can't find. Oh, there it is. 1.33 million for Bitcoin Cash. So who uses that anymore? I have no idea. But the fact that that's even liquidating people just tells me that we're still in liquidation season and people are just getting wrecked across the board. It's unfortunate for people who are going short because we all know where the macro is going. But at the same time, you just got to have that patience, trust the macro, and then don't just go over leveraged on your trades.
Yep, for sure. Let's move into ETH next, unless you have anything else to talk about with BTC or the kids there have anything to talk about with BTC.
Yeah, sorry about that.
No worries.
I got about 10 of them at home, so no worries. Let's see. I don't even know where I am right now. I'm looking at all these charts. There we go. All right, there we go. Okay, so ETH, we shot up a ton. And we were holding this level right here at 13.38 for a good amount of time. And we see that we clearly broke through it. Very similar to what we're seeing with Bitcoin. It's kind of hard to see because TradingView put this stupid little news button right here. But we see that the volume's decreasing while the price is increasing. Is that no different from what we're seeing with Bitcoin? Absolutely not. That's fairly the same. Let's go here. Here. Look at that. Another bear flag. So again, just what we're trading in right now. We're testing the upper limits of this. We go on the shorter time frame, let's say the day. Obviously, we're testing the upper limits of this. Overbought on the daily. It's 4 hours, a little bit shorter. Yeah, 4 hourly. We are definitely overbought, and we're coming down as we rejected off this. So we're going to be coming down. I think that's with Ethereum, it's no different than Bitcoin. There's going to be that move to the downside. I think we're still going to lose this 13.38 that was support on the monthly, or resistance on the monthly. But if we look at the weekly, we're moving pretty fast to the upside on the stochastic RSI. This is definitely going to be in the overbought territory by the weekly close. So, and we saw how many liquidations that we've seen with Ethereum. It's leading the pack with 170 million in the past 24 hours. So what this tells me is that Ethereum is probably going to hurt a lot of people. Still believe that 1083 is the key level of support that we are going to retest. We just have to see what this month does. If we close below 1338, it's 1083. There's no fun. Even I don't even know what I'm talking about. The baby just scrambled my brain, but we're gonna just go straight down. I think to 1083 because we've already tested this and we lost it. So 1338 would be pretty key resistance from here on out.
Okay. Yeah. I really would like to sell some NFTs and swap that ETH over into USDC in the coming days, if not weeks. I think I'll have the opportunity to buy back more ETH at a lower price. Let's get into. Go ahead.
I was just going to say a lot of people, are obviously seeing some pretty significant gains. Personally, if I had money in the market, I would be TPing I would take profit just because I'm that type of person. I understand how important, the dollar is, but I'm not a financial advisor, and I'm also have no money in the market. So it's pretty easy for me to say stuff like that. But yeah, I mean, obviously we know where the macro is going, and there's always going to be opportunity. But I like to take advantage of opportunities when you see green massive candles like this during a bear market.
Yeah, it's always nice to have dry powder sitting on the sideline to buy for buying opportunities. So that's kind of where I'm at. Is I still have long-term holdings in the market that I just don't really mess with. But I also do try to keep some cash on the sidelines if and when we see big drops, so I can try to capitalize on that.
Absolutely.
Let's get into our favorite tokens outside of BTC and ETH. Let's get into Matic next.
Awesome. So we're looking at the weekly right now, and let's look at the daily. That weekly is a little bit too scrambled for me. So we can see the move that Matic's made. We see that it's overbought on the stochastic RSI on the daily, but we're very close to this 94-cent level. And I kept this 94-cent level because that was where we found rejection here back in early December. That was key level resistance for me. Looks like we're coming back, and I wouldn't be surprised if we see some liquidations just push us to that 94-cent level, and then, obviously it's resistance. Macro hasn't changed for Matic. I still say 30 cents. I know that's contentious, but at the end of the day, I think that 94 cents is pretty good resistance, and we're just going to retest it. But if we look at the weekly. No, I want to look at the monthly, because we did close under that key level of support for the monthly. Yeah, see, we came down here. We were right under it. Then we shot right back above it. So clearly, we're going to have to see how this plays out. Maybe we get rejection here, and then we just come back to test it, and we just trade in this range for a little bit. But again, when we look at murdering someone in here, doesn't it?
I might need to get you a pair of headphones for a gift for future shows.
That, or just send the pacifier over.
All right, go ahead.
All right, cool. Let's see. I don't even know where I am. Here we go. Let's do here, parallel channel. It's not even worth doing the parallel channel. Let's just look at the big picture right here. On the weekly, we were in this big bear flag, and we're going all the way up. We tested the top, we tested the bottom, and we're moving sideways, and it's barely doing anything. So I anticipate this to still come down at some point. It's just it's the macro channel. Obviously, things don't go up in straight lines. Go up or down in straight lines, but I think we're going to get rejected off of this, and we're going to just slowly build our way down. And over the next few months, we'll see our Matic come down. This massive bear flag has not broke to the downside like we see bear flags tend to break to the downside. And even if we go back to Bitcoin and we look at the one that we were trading in between 16.2 and 17.2, right around there, we never broke down like from that at all. We're currently still trading in it if we want to consider it on the weekly. But if we look at the one right before FTX collapsed, that pull that went straight down after it was massive. It was insane. But yeah, so I think that Matic still has a huge macro move to the downside. Nothing's changed here. And again, nothing's changed off of one day of a pump. We were oversold on the weekly and the daily for a good amount of time. Things like this happen in a market. Obviously, money's going to go up or down. You just kind of have to find the support and resistance levels and just go with it. But I still think that Matic's got a good leg to the downside on the weekly and the monthly coming straight down. If we look at Link, because I don't have much left for Matic.
All good.
Yeah, Link is boring as could be. I think a lot of people forgot about Link in this pump. But yeah, it hasn't gone up much. It actually went through that, little range that we had here between 16.18 and 16.27. We broke right through it, but that might just be liquidations. We can see that we're overbought in the daily stochastic RSI. Might see this 653 level get hit. I wouldn't be surprised by that. Just one more liquidation, tap that, get rejection off that, and then we come back down. Obviously, we're looking for the macro, the bigger picture of these things. Getting rejected off this on the monthly guarantees that we're probably going to come back down to $5.53 just from where we closed. Hopefully, we want to have the best opportunity to enter a lot of these projects. So closing below 553 on the monthly would be ideal, but we might just retest it and trade sideways for the next month or so. But I do think that we're going to find this rejection at 653. I mean, we're pretty overbought on everything. I don't anticipate us seeing, 2 more weeks of just massive green candles every single day. I mean, that would be absolutely idiotic. People are definitely going to take profit at some point. And for for Link, even though it hasn't shot up a ton comparatively to other coins, I still think that it's going to play to the same support and resistance levels that we're been seeing across the board. So that's all I got for Link. For Matic, a lot of other altcoins, very similar, just support resistance. A lot of liquidations pushed it up higher. At the end of the day, we just need to see this price be sustainable. And if retail is the one who's holding it up, and I mean, we both anticipate it to be in a couple of rough months ahead as the rate hikes continue. I don't know. I just don't see sustainability and strength in the market.
Yeah, I mean, if we look back at, the rally that we saw from like mid-July until mid-September, of last year, we're kind of seeing something similar to that. And then, because these rallies, even though we're in a bear market, you're going to get rallies here and there, and they could last, 1 month, they could last 3 months, they could last a week, who the hell knows? But I think you just have to do, you have to take that bigger picture view of like, what do you hope is going to happen and what is the most realistic outcome? Because we're playing a game of probabilities here, right? Like, I hope good things happen. I hope the war in Ukraine ends and that a lot of these energy and food shortages that have been really negatively impacting people end quickly. But is that the most realistic outcome? I probably would say no.
Right.
So I think that you have to kind of remove what you hope is going to happen when it comes to these things and like give yourself the best chance to come out ahead in the long run. So, just keep that in mind. Like, as someone, I like to be a positive person, but you got to be a realist too. And it's nice to see the numbers go up. Like, everyone gets a little warm and tingly. And, if you interact with a lot of people who are in financial markets, like, they're in better moods usually, unless they've been shorting the shit out of it. Sorry, Ace. But, what happened today is not an indicator of where we're going to be 6 months from now.
Exactly. Yeah, and again, I think you made a good point about, obviously the mood has changed drastically over the past few days. I sent out a tweet. I was like, nobody cares about Binance and Gemini and VCG right now. Everybody's just so enthralled with these green candles. It's like, oh yeah, you were bitching about it, the collapse of these exchanges for the past, 3 months. It's like, oh, what happened? Did it just instantly go away because now there's money in the market? And, you're seeing a lot of what I think in the market, which isn't good, and the market's really good at doing this, is humbling people. We're seeing a lot of pride. Like, there's tons of people out there right now who are just boasting about how much money they're making. I'm like, okay, cool. You made 10% off your investment. You're still down 75%, since the all-time high. So if you want to boast and you want to talk about, like, I hope the Bears get slaughtered and stuff like that, be my guest. At the end of the day, I don't care where the price goes. I'm just playing the market, playing the game. But I think it's not necessarily a good idea to be too excited right now, because that market will definitely humble you. I've been humbled by the market before, and it'll definitely teach you a lesson that you never forget. So, for lack of better word,
the perma bulls who are taking victory laps right now, they should delete some of those tweets, because I think they're going to be holding some receipts when pissed off people are coming after them for taking their advice. So that's why we don't give financial advice here. We just give our opinions on things and try to provide a reasonable and clear-headed view on the markets.
I mean, even in the speech today, Biden was talking about, how great everything is under his plan. Okay, but a few months from now, is your plan. Let's not forget. So, you just got to be safe with what you're doing. You got to have a level head. And again, just be humble. It's gonna make you a better trader. You're not gonna be thinking, "Oh, I'm gonna make this much money," or "I hope this person gets destroyed." Just focus on what you're doing, and trust the macro. The macro is still the play, I think, for this bear market.
Yeah. Unfortunately, for a lot of people, they have to get their asses handed to them before they can be humbled and realize that they don't know everything, because it's sunshine and rainbows on the way up and you're the smartest person in the world. But when things go bad, if you're not willing to accept the fact that you made those trades, you're going to have a hard time learning from your mistakes.
Unfortunately true.
Yep. All right. That is going to wrap it up for today. We'll be back on Monday. Looking ahead, there's not a ton. There's some data coming out next week, like there always is, but I feel like we're going to start getting Q4 earnings in the coming weeks, so that'll be interesting to see,
Cool.
what's happened, especially these companies who have been laying people off. Like, layoffs are unfortunate, but a lot of time it does move the bottom line in the direction that shareholders wanted to, and the market can take that as a bullish sign. And then, we have about 2-3 weeks until 2.5 weeks until the next FOMC meeting. So I feel like if we continue to be bullish for the next few weeks, I wouldn't be surprised. But if we're overly bullish, I think Powell could drop a hammer at his next FOMC speech to try to remind the market that, like, hey, we're not out of this shit yet.
Yeah, that's a fair assessment too. I think that's very plausible. But yeah, I think that we could see a little bit of green, maybe retest that 19.6 level. Obviously, other coins are going to test those levels of resistance and see if they can break them. But weekly closes, liquidations, that's all I'm going to be watching. Seems like it's going to be hopefully fairly sideways. If not, we see some exciting price action, but nothing too big.
All right. That's going to wrap it up for today. Thank you for watching, everybody. We'll be back on Monday. Please hit that like button if you haven't already. Subscribe to our channel. If you know people trying to learn more about the markets and you want them to learn from a couple of guys who, just maybe don't know everything, but, we know a decent amount, send them our way. We'd love to try to help more people out. So for Kevin, for the team at FLOLiO, I'm Jeremy. Have a great day, everybody. We will see you next time.
Balls of steel.